Ladies and gentlemen, good day and welcome to the Q1 FY24 earnings conference call of Jindal SAW Limited, hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikash Singh from PhillipCapital India Private Limited. Thank you, and over to you, Mr. Singh.
Thank you, Michelle. Good morning, everyone. A very warm welcome to Jindal SAW Results Concall. Today we have with us from the management side Mr. Neeraj Kumar, Group CEO and Whole-Time Director, Mr. Vinay Gupta, President and Head Treasury, Mr. Narendra Mantri, President, CFO and Head Commercial. Without taking any time, I would hand over the dais to Mr. Neeraj Kumar for the opening remarks. Over to you, sir.
Good morning, friends. This is bright Monday morning on the eve of Independence Day. So let me take this opportunity to wish all my fellow Indians, and if there are some participants from abroad, greetings for the season on the eve of our Independence Day. India is definitely making these strides in the right direction, and as it appears, India would assume a space or a place of prominence in every field which are important to the world. Likewise, we have some happy news for you from Jindal SAW as well. Now, finally, we are seeing some budding, some flowering on Jindal SAW Limited. This is the culmination of a lot of effort in the last few years, where there was a very clear strategy of working on a three-prong attack: corporate reorganization and restructuring, dealing with the legacy issues, and addressing the operational matters. On all three fronts, as we have been talking over the period every quarter, there was a clear roadmap, and we kept on achieving milestones as we move forward. Now, we are beginning to see a result which is a culmination of all the three, and it is also a clear indication that this is a beginning of a new phase for Jindal SAW. So with these, let me very quickly run you through the quarter numbers that we have taken up in the board. The board has approved it. It has also been announced to the stock exchange. The top line, 3,831 crores as opposed to 4,676 of the trailing quarter and 3,019 of the comparable quarter last year. EBITDA 615 as opposed to 673 in the trailing quarter and 255 in the comparable quarter. However, let me point out to all our listeners, the 673 has a book entry which has been explained in my last call of 84 crores in Q4, for the full year about 197 crores, which was essentially because of the accounting treatment of the change in the terms of the RPS with JITF. So if you give that impact of 673 minus 84, you will see that it will follow through right till the PAT level, and then there is a pattern which is emerging that not only for the comparable quarters Q1 last year but and Q1 this year, even on the trailing quarter basis, the businesses are beginning to show significant improvement. For the benefit of all the viewers and the listeners, Jindal SAW traditionally has always shown a cyclical nature where Q1, Q2 is usually subdued, Q4 is the peak. So therefore, by the indication that we are getting in our Q1, it appears that this time also, as we did last time, Q4 we are likely to scale a new peak. That should give all of us an indication and a comfort that as an organization we are confident that we are well poised for the next 12 to 18 months, and this confidence is coming from various aspects of the business. I will get into the details as we move along, but healthy order book, good product segmentation, good value addition. So lot of things are going along which is improving the fundamental strength of the company, and therefore we expect that this momentum, this growth trajectory should continue. So let me just complete the full financial highlights. Financial expenses 132, 134, which is more or less exactly the same from trailing quarter. Depreciation 108 versus 99. This is primarily because of the Sathavahana acquisition, because now the Sathavahana assets have been added to the balance sheet, and therefore this depreciation is largely on account of that. As I said, if you normalize the last quarter of last year, which is FY23 results, then you would see that even on a trailing basis, the Q1 results are comparable or better in many fashion than the last quarter, which is usually the best quarter. Last quarter is always the best quarter for Jindal SAW. Now, before I move forward, let me also let our listeners, stakeholders, everybody know that in our now presentation to the board, in our annual reports and on our investment call, we are making a change, because as things were progressing, we were getting a lot of feedback. Ourselves also, we were feeling that the investors or the stakeholders are finding analyzing our results a little complex. So the effort was to, as far as possible, simplify it for our stakeholders, investors, bank people, so that they can have a better understanding of the results. B, align it in such a manner that the projections again get better aligned to the market dynamics. C, we also take care of all the strategic concerns that we had for Jindal SAW, or we have been having for Jindal SAW. So we have now come up with a new approach. If you all recall, we have always been saying that for Jindal SAW Limited, the USP, the strategic advantage that we have is this is a multi-divisional organization. by design, all these products have been kept in one legal entity.
আপনি যে ব্যক্তির সঙ্গে কথা বলছেন তিনি আপনার
Sorry, sir. Please continue.
So, as I was saying, so by design, we have kept all these different product segments, etc., into one legal entity so that we have a very robust business model. So this was something that we wanted to preserve and we wanted to build on. Second, we are seeing now a very clear-cut emergence of 3 market segments, and all of them now are showing very clear-cut market dynamics. The third, since we are adding new products every day, but on our core competency, which is the pipe and tube segment, the product segmentation was becoming very complex because there are complementing, supplementing, and overlapping products, same product being used for different segments, different products being used in the same segment, and therefore to put all these 3 to rest, now we would be reporting our revenue broken up into industry segments. We have chosen 3 important buckets: water, which we believe is going to be now the driver for Jindal Saw for some time to come. Second important is oil and gas. Again, what we are seeing an emerging trend that in oil and gas there is a very strong international element. In water segment, on the other hand, there is a strong domestic element, and therefore we thought it's important that we report these 2 segments separately, and we also report the domestic versus export mix. The third segment, which is the bucket, is for others, which includes your power and other things. So now we would be reporting the results or revenue broken up into others, into oil and gas, into water segment, because these market segments are well defined and can always have a more robust outlook, projection, stable. One simple question I just want to ask: where do we will be reporting the pellets?
It will be a separate line.
So the pipe would be these 3 segments, the entire pipe segment. The pellets would be a separate segment because that by itself is a segment by itself. It's an iron and steel intermediary. And third, then there would be another segment also which will have powers, etc. So pipe would be divided into 3 segments. Pellet would be a separate segment, and the other small businesses like other income, etc., would be a third segment. That is how now we will be reporting all our results going forward. So now, keeping that in mind, let's move forward. If we see the consolidated results, I'm sure all of you are having the numbers in front. The consolidated results, there are only 2 important aspects that I want to make, and then move on to more important aspects on Jindal Saw, which is the consolidated results or the consolidated other subsidiaries, associates are contributing to between 10 and 15%, and therefore we don't consider that to be so significant that we discuss that in too much detail in this call, because there are very important other things about Jindal Saw that we want to talk, because Jindal Saw per se has become very large. So relatively the consolidated segments contribute between 10 and 15% of Jindal Saw. Second, all the segments, all the subsidiaries are positive, means they are adding to the EBITDA, they are adding to the top line. And therefore with that, let me skip, and as I said, for both consolidated as well as the standalone, the revenues would be shown and would be split in the industry-wise segment, as we have said, as we have not been doing in the past. For strategic reasons, we will not be presenting the EBITDA figures separately, because that, as I said, is of strategic importance to us. Turning our attention to the profitability and EBITDA, if you see, it has shown a significant improvement from a 12 to 14 range. This time, first time EBITDA percentage to sales has gone to 16 range. Now, for the year end, we definitely expect there is going to be an improvement, or this momentum should continue. But whether we still remain at 16 and above, or a shade below, say 16, maybe 15.89 or whatever it is, that would depend on how the market dynamics are and how the shipments take place. Because this time in the order book, we also have some very large contracts, and different contracts have different profitability segments or profitability projections. So based on how many shipments we are able to capture in one quarter, and if there is any last spillover, there could be a slight fluctuation, but the indication, the trend of the EBITDA staying in and around 16 shall remain. A PAT of 277. Again, we are very encouraged by the result. And looking at now all of these three, the top line, the EBITDA, the PAT, the way things are behaving, on a standalone basis, most likely for the year end, if things progress, go the way at this point of time we are able to see, we could reach significant milestones on each front, which would be unprecedented for Jindal SAW. So a top line which was never seen before, an EBITDA beyond a certain threshold which was not seen before, a PAT, maybe a significant milestone beyond a magical number which was not seen before. So that's how we see our outlook for the coming year. Moving our attention to just give you some breakup sales quantity this year, this quarter we did 3.68 lakhs ton of pipes as opposed to 12.85 lakh tons of pipe. As we said that now we would be it will stay in that corridor is what we expect. Our order book, the composition would continue to be water 70-75, oil 20-25, industrial sector between 5 and 10. That's how we see our order book. That's how we see our revenue. Currently, export, because of the oil and gas emphasis and emphasis on the NEOM, which is a Saudi project, which is a major project that we have, is 35-65 for the entire pipe segment. We hope that the export would remain at least above 30 for the year end. So that's how we see the revenue composition. I hope this new reporting, this new segmentation would give ease, comfort to all our stakeholders. Turning our attention to the debt. Last quarter has seen a increase in the long-term debt. This is largely on account of the Sathavahana acquisition funding debt coming on the balance sheet. Now the long-term debt stands at close to 2,000 crores, 1,998 crores at the quarter end to be precise. Working capital 2,399 as opposed to March 1,136, 2,637. So as opposed to 3,733 crores December, 3,059 crores March end. The June end number is 4,396, which is largely because of the Sathavahana acquisition debt coming on the but what is important, the treasury team has worked hard. The repayment pressure on Jindal SAW, including subsidiaries also, this holds true, has been very well balanced and spread over. So now for standalone Jindal SAW, the debt repayment pressure, which puts liquidity under pressure, is not more than 300 to 350 crores any year. In fact, the way the standalone balance sheet stands, within the year and a half, except for the LIC bond that we have, which is a long-term bond, as we have spoken about, and the Sathavahana acquisition debt, there would be no other long-term debt. We will repay all of them. But every year, the repayment load will not be more than 300 to 350 crores. So therefore, we are very comfortably positioned as far as the liquidity of the company is concerned. CapEx continues to be within control. We are carrying out improvements. We are carrying out capacity additions. We are carrying out modernization. But there is no major project that has been announced on the horizon. So we expect the CapEx. So if you see the way the cash flows, there would be a lot of free cash flows is what we are expecting to come out of the, would be largely used to pay for CapEx, pay for loan, use it for shareholders distribution, and also we expect working capital reduction. So in aggregate amount, because of the ramp up of the operations, we don't expect the aggregate working capital loan to come down, but there is definitely going to be an improvement in the percentage of working capital loan to sales. So that efficiency or that improvement our team is working, and we expect that we will achieve that. So, more or less, I think I have given you a good overview of how Jindal SAW is doing and will continue to do forward on what is the outlook. We assure all of you that the management control, the visibility, the diligence that we are exercising or we have been exercising, we'll continue to do that. Let me address now a few other important aspects which are material to Jindal SAW, even if it is not directly related to the operations. The first important thing that I would like to mention is about the NTPC. But before that, okay, SIL. Sathavahana, as you know, now is operating as a division of Jindal SAW, and during the first year of operation itself, we expect them to do a very good capacity utilization, do a sizable tonnage. We have the order book, and they should contribute positively to the EBITDA. Next year, we expect Sathavahana to start performing at its optimal capacity. So in the first year itself, and that is again a testimony to how the whole transaction was structured. The repairs and maintenance were carried out in the intervening time. First year itself, we are achieving a significant capacity utilization, and the operations would turn EBITDA positive in the first year itself. So that's one important thing that I wish to let all of you know. NTPC seems to, apparently it appears to have a setback, but the answer is yes or no. Yes, because even though the judge had ruled that no more extensions would be granted, but as you know, Mr. Solicitor General is representing NTPC on this, and therefore he always is busy and has something to tell the court, that he is busy with some constitutional bench, some important matter of Government of India in Supreme Court, and that is how he has been able to get extension so far. But this time the judge clarified that give me one more date, and then Solicitor General himself was there to clarify that, okay, give me 2 dates, I will finish all argument, and this time I will never come for any extension. If not me, now this is the first time that he said in the court that if not me, then somebody else will represent NTPC. So that now at least gives us confidence, which is this month end, the next hearing, that the hearing should start. He has asked for 2 days that he will finish all his argument. So we'll have to wait. Probably when we are having this next quarter call, there would be some announcement that I can make for all of you. But this is how it has developed in the court. I thought it's important for all of us to be aware of that and be on the same page, because you know, over a period of time, the significance of this whole thing has definitely come down, because we have survived. We have learned how to have our finances become robust or work around it, but still it is something that we are keeping an eye on. The second or the two very important aspects that I would like to point out is, now we have entered the election year, and we expect that the momentum on infrastructure spent on the water segment, on the oil and gas or domestic market to remain robust, because I'm sure the government has a policy of using development as a major plank for their election strategy. So we expect that because of the election year, the emphasis on the infrastructure spent on the projects which are nearing completion will continue, and that is good news for us, especially as we are contributing to those very infrastructures. The second very important thing that we are noting, and we are feeling happy about it, that Jindal Saw's shareholder profile is beginning to change. It has shown some significant movement where, as we have seen that now the share prices are reacting, or the share prices are responding to the fundamental strength that the organization has built, and we are seeing that there is a new class of shareholders who are entering the shareholders list. We expect that this would make our shareholders base more diversified and more robust. So with all of these comments, let me end here and leave some time for questions, with wish once again for all of you for Happy Independence Day tomorrow and a good year ahead of us as we move quarter to quarter. So thank you very much. Let me stop here now for questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may please press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We will take the first question from the line of Radha from BNK Securities. Please go ahead.
Hi, sir. Good morning. Many congratulations on very good results. So my first question would be with regards to Sathavahana. So just wanted to understand what is the useful life of the assets in Sathavahana?
The useful life of the assets of Sathavahana. See, Sathavahana as an organization now it stands merged. So now, as a going concern, Sathavahana has become a division of Jindal Saw. So then it is, as a going concern, has the same life as Jindal Saw. Now, talking about the equipments and the assets, all these equipment and assets have gone through a major overhaul before we managed to take it over and finally begin operations. So this would have a normal life that a new plant and machinery would have. So the way we operate, that all these major equipments, they keep on having a 5-year overhaul. A few things get replaced at 10 years. So it would run as normal operations of other DI facility that we have in Jindal Saw. So for the purpose of depreciation, we are following company law. For the purpose of income tax, whatever is there provided by the thing, we are following. So we don't have a differential depreciation policy for Sathavahana than what we have for our Samaghogha DI plant. It's exactly the same.
Okay, sir. Secondly, wanted to understand from the industry perspective, and not particularly for Jindal Saw, but if you could give insights on what would be the average EBITDA per ton that DI players in India and in UAE are making with the current cost structure and business scenario.
I don't think it would be appropriate for me to address industry kind of because that would be speculative, and this is being a Jindal Saw call. I would not be able to give you any guidance on the industry standard of EBITDA. I'm sure you would be able to check that with some of our other peers who are specific to their product.
Okay, sir. And so lastly, could we get the DI volumes for India for 1Q?
Madam, again, I have been trying to refrain from giving the product segment. Look at the water segment. Of the 368,000 total pipes that we sold, roughly 75% have been sold in the water segment.
Okay, sir. Actually, that part of the call.
Give you so that let me just give you the one example so that you will understand why we should not get into that kind of a discussion or that kind of a problem when it comes to Jindal SAW. See, look at in DI we manufacture pipes from 100 mm to 1.2 meters in diameter. In the spiral or the LSAW segment, we again manufacture pipes starting from 16-18 inches, which would be around 600 to 700 mm and goes much higher. So a good 500 to 600 mm, there is a complete overlap between DI, spiral and the large diameter pipe, and both could be used for water. We have got this insight because some of our contracts, both domestic, internationally, we are seeing that because of the usage or because of other compulsions, customers are shifting from one product to the other because both can transport water. And therefore, I would request to please look at the industry segment, which you would have a lot more information in the public domain and would make your projections a lot more robust.
Okay, so actually in between I got disconnected, so that's why I had to ask you this question again. But I don't know if you have mentioned, but could you give us the oil, water, and etc. breakup for the current order book?
Yes, as I said, oil and gas sector would be around 70-75. Would be around 20-25. Oil and gas, water would be around 70-75, and others, which includes industrial, etc., would be around 5 to 10. In the pipe segment, the pellet would be reported separately.
Okay, so thank you and all the best.
Thank you. We'll take the next question from the line of Ria from Equitas Investments. Please go ahead.
Hello. Thank you for giving me the opportunity and congratulations for good set of results. My first question pertains to the gross margin. They've increased significantly. So, what part of it would be attributed to inventory?
Hello, I can't hear you. I can't hear you. The line dropped. I just couldn't hear anything.
Ma'am, could you please repeat your question, Ria? Miss Ria?
Sure. My first question is in regards to the gross margin. So I just wanted to know what part of the margin is attributable to inventory gains and what are the sustainable gross margins for us going forward?
Okay. Just because of the liquidation of inventory, that's not a significant change. I have already covered in my initial remarks that the improved EBITDA margin is likely to now stay range bound in whatever is being reported now. Now we are reporting 16%, so it would be range bound around 16%, primarily because A, the raw material prices have stabilized, commodity prices have stabilized. We also have taken some effective steps in getting a price variation clause in the top line so that there is some hedging and adjustment available. B, we have also moved up the value chain so that we have now products which are more value added, typically having a higher margin. So we expect our EBITDA margin to stay range bound around 16, a little above, little below, because still it is on 16.05 based on the order book and the execution that we are able to achieve during a quarter.
Is it fair to assume that with the export mix being at 35%, that's why we are seeing improved rate of margins?
Okay, I'm just thinking carefully, because see, in the export we also have a few very high margin orders. So yes, currently the 35% export margin or 35% export component is helping the EBITDA. So it is a combination of, again, both. That's why if you really see now, the Jindal SAW results have become so complex because of the capacity, the size, the industry segment, that it is best that we stay. But to answer your question, yes.
And would it be possible to give the exact margins for the NEOM order, or just a range?
I don't share, madam, when we are not able to share the EBITDA margin for the products, you are asking for a
okay, that's okay. That's okay.
In a specific contract.
And in terms of hunting, when we say that we would be starting in Q3,
yes.
So
okay. Yeah, I should have addressed hunting in my opening remarks. Okay, hunting, now we are going for a trial run. The trial run results are coming out very good. We are going for a grand opening where the senior management of hunting are going to travel to India to make sure that we have a formal opening during this year. And the good part is that we still have an order book where, again, hunting as a subsidiary, which you will all get to see, may show positive results even during this leftover period of this year. So it has entered the market on a very sweet spot. And I repeat, hunting all product would be in the nature of premium connections for oil and gas sector, starting from the range of 2.7 by 8, going right up to 36 inches, which are called the connector pipes and tubes, casing pipes, drill pipes, and all pipes and tubes between this size range, made from different grades, which includes the CRA grades, the carbon steel, and the stainless steel. So a very comprehensive product. Size range, I repeat, 2.7 by 8 going up to 36. Grades covering CRA, which are 13 chrome, etc. Carbon, typical, the commercial grade, alloy, and the stainless grade. So far the trial production is successful. It's looking, all the machines are behaving well, and we are hopeful that by this year end, which will be 31st March 24, we should have positive result even in that subsidiary.
And will we be able to ramp up completely in this year?
No, capacity, madam, ramping up would be probably we expect next year, because anyway the max that we will get this year would be say 5 to 6 months max. So it will be less than 6 months. So the capacity expansion is next.
Okay, thank you so much. My question has been answered.
Thank you. We'll take the next question from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello.
Yes, sir. Please proceed.
Yeah. Thank you very much, sir, for the opportunity, and many congratulations for the good set of results that we have posted. So my first step, I just wanted to understand. Now you said 16% EBITDA margin. So are we talking here on the console level or at the standalone level?
Okay, I clarified this. Whatever I was talking about is on the standalone level. Consol, this time purposely I have not given the numbers or I have not discussed in detail, because anyway now it is within the 10 to 15% range. Correct. Of the standalone. So now the standalone has become significant and large, so it's important that we focus on that. So all these guidance, all the numbers that we discussed today on the call were largely on the standalone basis.
Okay, understood. Fair enough, sir. I understood that. But I mean, in terms of standalone, you did say that largely it should be range bound, right, around this level. But because of the better performance in subsidiary, can we expect some improvement at the console level margins? Because I think subsidiaries are doing well, right, for us.
Correct. But even if the subsidiaries do very well, the impact overall on the console would be reduced, because the entire contribution from subsidiaries are in the 10 to 15% range.
Correct.
And Jindal SAW is on a upward trajectory. So yes, what you are saying is correct, but will it make a significant impact, at least for this year? I don't think so.
So at the console level also we do expect this range bound to continue, right? What we did in first quarter, largely.
Should be.
Understood. Fair enough. And sir, regarding the central government capex plan, I mean, do we have we seen any kind of indication or urgency you have seen where you're seeing the government is accelerating the infra capex or the Jal Jeevan scheme spent? So any kind of indications that we have got as we speak now?
Yes, we definitely see the all the ongoing contracts. Definitive pressure on supplies with a view to keep up to the calendar that they have for the project completion. Especially for the projects which are likely to get completed over the next 9 months, there is a lot of emphasis to complete those projects so that they can, announce the opening of the project.
Understood. And that's very helpful, sir. And in terms of subsidiaries, I mean, all our subsidiaries are in green, right? In the first quarter?
Yes.
Okay, understood. And I think that's it from my side. All the very best. Thank you so much.
Thank you.
Thank you. We'll take the next question from the line of Riya Jain from Pranjal Corporate Services. Please go ahead.
Congratulations, sir, for amazing results. So just a couple of questions, mainly on the revenue side. I agree to your point that you said that in Q4 we definitely have great revenues as compared to Q1 and Q2. But to understand this a little further, I want to know why as such in Q1 and Q2 the revenues are on the lower side as compared to even if we look at the standalone. So from 4,500 to 3,700 now. So why is there this dip that has happened?
I have pointed out to you that Jindal SAW typically has a quarter-on-quarter cyclicality, primarily because a lot of our revenue or a significant portion of our revenue comes from where our counterparty or the client is government. As we all know, there is a huge amount of push in the government sector, whether it is state or center, to use their budgetary allocations and to complete the projects as their budgetary allocations come to a close. And therefore, we have typically seen the Q4 being significantly higher than the Q1. Let me just take an example of the last year itself. Q1 top line 3019 and Q4 top line 4676. So if you see 4676 versus 3019, it shows almost a 50% jump. So if you look at the last few years' results, may not be exactly 50, but the trend of Q4 being significantly higher than the Q1 of any typical financial year stays primarily because our counterparty being Government of India and state government, and they are pushed to use their budgetary allocations.
Got it. Got it. Other than this, in terms of order book, so if I heard it right, because my line had just dropped in at that point in time. So you said the order book currently for Q1 24 has been 3.98 versus the previous year when it was 12.5. Was that correct?
No, madam, I was talking about the top line.
Okay, okay, got it, got it. Yeah, that's it from my side. Thanks. All the best.
We'll take the next question from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Namaskar, Neeraj ji, and thank you for this opportunity. Sir, even my call was dropped 2-3 times, so sorry, pardon me for the repeated question. Firstly, sir, a better understanding from the change in inventory that we see for Q1. Are the deliverables for Q2 greater than that for Q1, because we see the change in inventory to the tune of 400 crore on the higher side for Q1 end? This is a good understanding that deliverables for Q2 will be higher, or if you could give some understanding.
If you see the supply in Q2 in terms of a total tonnage would definitely be higher than the supply in Q1. But how much of that comes through the production and how much comes through the inventory liquidation is a matter of detail which we will have to work it out. Because definitely we are laying a lot of emphasis on liquidating the inventory, but the supply is going to definitely be higher. So we expect the Q2 result to be an improvement over our Q1 results. Right,
sir. Sir, and coming to the Sathavahana story, as now this being a merged entity, and thank you to the Treasury team for should be given the credit as you have earlier given also. What should be the tax advantage on the carry forward losses? Because I think so on a standalone, we have not made any tax provision for this quarter. Current tax हमने nil रखा है.
हाँ, तो current debt nil रखा है, तो ऐसी है ना, the accounts team, the accounts and the tax team at this point of time are engaged very intently in discussing all of these with the tax experts, statutory auditors and all of those. Because another thing that has yet not been firmed up as yet is the gain or the addition that we are going to have in the capital reserve on account of this takeover. One thing we are very clear, that the difference or the acquisition funding is less than the intrinsic value of Sathavahana. That at least has been sorted out, but the exact amount is still being worked out. So once those things are getting worked out, then probably we will be able to get a handle on how the tax treatment of the same would be done. So probably we would have that more towards the next year, more towards the next quarter, or even after that, because what I am told is that a valuation exercise for this to get a fair value of a concern is a complex exercise. The experts are at it as we speak.
Sir, I got your point and I understood it, but because of the carry forward losses, there has to be the tax incidence would be lower. This understanding is correct. The fair valuation part would be a book entry, but Sathavahana as an entity was having carry forward losses for over many years. That advantage would be entitled to Jindal SAW now, because this being a merged entity.
Okay, yes. For this year onwards, we would definitely get a tax break, but the quantum of it, the manner of it is being discussed and agreed between experts and our accounting team.
Correct, sir. Sir, for the steel plant,
I'm sorry to
ma'am, a small point.
This will be the last question. I'm sorry.
Ma'am.
Ladies and gentlemen, due to time constraint, that was the last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you all. Sorry, Saket, probably they couldn't take your last question because, you know, these conferences are timed and there is a hard stop, but I'm sure you could ask those questions to our team which is handling the investor relations and you will get all those answers. So sorry once again, Saket, but must get your answer from the investor team. I'm happy that now at least we have been able to get some cheer on our shareholders, stakeholders, and I have to thank them for their humble wait, because I know sometimes, and I have gone through, while they have been with us, they have gone through. We were together in a situation where seemingly we were doing things right in terms of fundamentals, but somehow we could not see the results, especially getting reflected in the market cap. So I am delighted, I am happy that now that period is over. The share market is beginning to reflect the fundamental strength that we have been able to build in the organization. As I mentioned, the shareholder profiles are also changing, which is again a good news for us. We continue to do our good work, continue on the path of dealing with the legacy issues, dealing with the operational issues. Corporate issues are more or less taken care of with the latest round of merger, etc. announced. So we will continue to work on those three prongs, and we expect that we will close this year on a very positive note, while we would definitely cross some of the significant milestones. So thank you very much. Thank you for being with us. Thank you for your patience, and hope to see you next quarter. Thank you. Bye.
Thank you, members of the management. Ladies and gentlemen, on behalf of PhillipCapital India Private Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.